Building a small trading account requires discipline, patience, and a well-thought-out strategy. Here are some steps that you can follow to build a small trading account. Set realistic goals. Before you start trading, set a realistic goal for your account size and the profits you hope to achieve. Don't expect to get rich overnight, and remember that trading is a long-term game. Choose a broker. Select a reputable broker that offers low fees and commissions. Look for a broker that has a good reputation and is regulated by a reputable financial authority. Determine your risk tolerance. Decide how much risk you are willing to take on each trade. A general rule of thumb is to risk no more than 1% of your account balance on any single trade. Develop a trading strategy. Develop a well-thought-out trading strategy that takes into account your risk tolerance, trading style, and goals. Your strategy should include rules for entry and exit points, position sizing, and risk management. Start with a small amount. Start with a small amount of capital and gradually build up your account. Don't risk more than you can afford to lose. Cash account is a good way to avoid the PVT rule. Practice good risk management. Use stop-loss orders to limit your losses and take profit orders to lock in profits. Don't overtrade, and don't let emotions dictate your trading decisions. Keep a trading journal. Keep a trading journal to track your trades, analyze your performance, and identify areas for improvement. Always find key levels. Use pivot points. Learn from your mistakes. Expect to make mistakes along the way, and use them as opportunities to learn and improve your trading skills. Treat trading as a business. By following these steps, you can build a small trading account over time and improve your chances of success in the markets.